All right, this is what I call the Warren Beeler flow chart. I'm an old banker. Before I was at the Farm Service Agency, I was a banker in West Kentucky. And one of the things I always would do, especially on big farm purchases, where you get a big annual payment, I always ask you, when do you want your payment due? Right, and we pick. So it makes no sense. Pick a date you don't have any money. So, let's date you may be selling tobacco or you got something going on. I always had to draw a cash flow cycle. Now, dairy, I know it's a continuous cash flow, but when you're dealing with crops like tobacco or your row crops, you may have one payday a year. I always would draw out the cash flow. This is the cash flow. Warren, when he got the governor's office ag policy, said, see how the money flows. This is how the money flows, and for our folks from other states, this is what we're talking about with our master settlement agreement. Back in the late 90s, there were a lot of lawsuits with the states against the tobacco companies. In 1998, there was a what we call master settlement. 46 of the 50 states were settled with tobacco companies. To stop the lawsuits, they would pay formula-driven payment each year to the states. This is based on the national cigarette sales, and actually we saw an increase. One of the unintended side effects or corona, the COVID crisis was we actually saw national tobacco consumption go up. Cigarette sales were up nationally, so we actually, the counties got more money this year. The state got more money this year because of this thing. Now, I don't think that's sustainable. We've been watching this, Joe, steady decline for the last 20 years. We had. This year we had $126 million that came into the Kentucky. Now, the General Assembly of Kentucky had the foresight in 2001 to pass House Bill 611, and that appropriated a large portion of this tobacco settlement in Kentucky to agriculture with the mission of helping tobacco producers transition, diversify, move away from this crop. $5 million is what the General Assembly gets to work with. And there's already been a few other things that come out. We've had some bond issues and compliance and compliance, 400,000 compliance comes out. 95 million. Half of that goes for healthcare and early childhood development. Half goes to agriculture. Now, the few things for agriculture that comes off the top, one being our farm food banks, and it's $500,000, and then our conservation district division conservation is 3.3 million, with 2.5 million of that going for the conservation cost share programs. So that comes over to the Ag Development Fund, $44.5 million. Of that, 17.7 goes to the counties. 118 of our 120 counties have designated amounts that they get. Last year, the General Assembly moved a portion of this to give a small amount to the other Pike and Knott, or two counties that do not get county money. But the last year, they were able to get some.
Sorry,
We're good. I'm good from there. So with each state that, or with each county, the amount they get is derived based on their dependency by how much tobacco base they had at this time, based on how much tobacco contributed to their local economy. We have varying programs. Some counties 30,000 is what they get. Others, Barron, #1 county, #1 Berkeley independent county, and that gets close to 400,000. So this comes in at the county level. The other amount, $27 million, comes to the state, and it goes to administer state programs. And KDDC is one of the big items of one that we fund from the state fund. Now, show of hands, how many served on a local ag development county? Right, the way you say that, Bob and I were talking earlier about, we overwork the people willing to serve. So I knew we'd have several hands showing up. But the county money, you have complete autonomy at the county level as to how you invest these funds. Now, a large part of them go into a program is the county ag investment program. So the key program where you've got a lot of programs that you can tailor to fit what is working for your project. I talked earlier about investment dollars, unlike what we're talking about with FSA. All these require some type of matching fund. They're what I call that economic carrot to incentivize good management practice. Something that you think I would like to try in my operation. What sure is good that I've got somebody else sharing in some of these costs. About 80% of that county money is designated to the CAPE program. The other programs, one we're seeing getting more and more, I think 25 counties ran the youth ag investment program. That is one where we had didn't have quite the rigorous scoring that Kate does. Not really fair to have a 6-year-old against a 17-year-old on a project, but again, cost share program there. Big one too, our animal program, shared use down in county that allocated money for shared use equipment. Number one items, no good drill for those. I've seen a lot of those. Energy programs, water programs. New one we did this year. One of the things that's great coming from a guy that ran a federal agency and now working for a state agency is how nimble that we can be, how reactive. Decisions are all made by this board of directors who are appointed historically by the governor. Now they're appointed by the ag commissioner, confirmed by our Senate. But we recognized the problem last year. Comment earlier about COVID and smoking, but we also walked in for the first time in the grocery stores and saw something that everybody in this room knows. Is just how fragile our distribution chain is, how easy supply disruption cause issues. But now the whole consumer base saw it. They walked in for the first time and saw no meat in a counter, saying that there were shortages of toilet paper. One of the things that we were able to do is allocate some money to go toward meat processing. Original intent was just to expand existing processing plants. We add some freezer space, add some equipment, but this is expanded to where we're having some new folks coming online, utilizing some of this cost share money. We're funding no more than 50% of the project, going no higher than $250,000 in state funds, but we also are letting this one, instead of having the county matching funds, we're doing up to 250, depending on the size and scale of the operation, but also the county funds that are invested, get back to that autonomy that you all have at your local county committees to invest in something. We had $6 million total invested in about 30 projects. And I love it when I look at it on the map, and I'm always looking at what we can do for all of Kentucky. We truly spread the state, going from Graves County to Greenup County with projects like this. Dairy is a big one for what we've had. We've had over $24 million invested in Kentucky dairy over the 20 years of this program. And we've got several different programs. We've got dairy that comes through your individual operation would. See, we've got WKU in here. There's the WKU Smart Holstein Lab is one of our projects. KU robotic milker. You've got tours going to Kitty's Cheese. And then the big one here, the AUPC. So all your going to tour Chinese Dairy Barn. This was one of our early projects. And in fact, I took the group last week. We had a joint board meeting with our Ag Development Ag Finance Corporation here in town. We went out and visited this one. And Chinese have been a participant in multiple programs from what we've had, agritourism, with our energy program, and then the value-added process. All in all, investment in Kentucky, we're getting real close to $700 million that has been invested over the years. That was the purpose of this retreat we had last week, was to sit here with the board and look, okay, we're 20 years in. What do we want to be doing for the next 20 years? What can we be doing to continue to see the value of these investments? Look back and see, have they been successful? I think this next two slides really tells the story of what we've done. In 2000, ag receipts in Kentucky were $3.4 billion. That's farm gate receipts. That's what you all are getting when you sell your product at the farm level. And now increased to $5.5 billion. $2 billion a year higher in ag receipts. Now there's a lot of things that could be part of it. I'm not saying that all because of the investment of ag development. We've got improvements in technology, we've had inflation, we've had other things that have come into this, but I do believe that we're a significant part of what has happened in the state. Because what we did, tobacco at the time of inception was 25% of our ag receipts. 25% came from tobacco. Fast forward now, 20 years later, the tobacco slice of it is so much smaller. Significant crop. $300 million is still a significant crop to our ag receipts, but it's now only making up 4% of that. The thing that does concern me is where you look at where we're dairy. We went from 8% to 3%. That is one we are all very aware of. in this room, just to see more and more folks exiting the industry. But I am proud to see that we have diversified Kentucky agriculture and growing it. That's what I think we need to be looking at with projects. What are things that are going to continue to add value to Kentucky producers and to be sustainable year on? We also have the Kentucky Ag Finance Corporation. One of the things I get asked when I'm doing county committee meetings, probably what's going to happen when this money's. Well, right now, the way the law is written, the pocket companies are paying this for perpetuity. So that means they're paying it forever until they can figure out a way to get out of it. But I think years in, we're seeing getting it where we're looking at is this national, as the national sales will be getting less and less. A portion of this money was taken aside in 2004, set up to do a loan program. We work with banks. We don't do the direct loans. We partner with commercial lenders, members of our credit system, and we do loans that are ag infrastructure, processing, and our biggest one is our beginning farm loan. We all know how capital intensive it is, how hard it is to buy that first piece of property. We work with the bank to do up to 25% of the project up to $250,000, and we loan our money at 2.75%. Who does the work? They do the documentation. They do all the servicing of the loan. We give them 0.75% for servicing it, and we get 2% back out. I'm very proud to say that we have now crossed the $100 million mark. That's about the size of a small bank in your area, and that has been done with just slow and steady participation. Interest rates have gotten so low that this is not as big a selling. This I started really working with ag development funds. It was back in mid 2000s. Prime rate was 8.25. Do half the project. I built some grain bins and barns and a lot of things. Right in half of the project at my rate, had it at 2.75, and it gave the producer a really good blended rate. But it's still at 2.75. We're still below the average rate of historic inflation, and we're at a point now, 100 million in assets, loans out, that we're receiving back each month about $1 million principal return and interest. And that's about what we have in obligations and funding new requests going out the door. So we're at the point we're kind of self-funding where we're at. This is a program that even if money stopped, we would go on perpetuity. And we've got right now, there's been 1,200 plus loans that have been approved, 171 million have been loaned out. Got a return of this principal that we've loaned back. So that's my quick synopsis. I think that gets us about on our time on this, but definitely happy to take questions. I will say here for the break, if anybody wants to talk, unfortunately, I'm going to miss the tour this afternoon. For logistics, I was at Lacefield last night, got back over here, and then I'm going back to Fulton for a week later out there. But I think this slide sums up what we're here for. We're here to grow Kentucky agriculture. We're here to invest in the future, and we're here to be a partner and work with you. And the best thing I can say that I'll take the question, get an idea, get a hold of me, get a hold of Danielle, get a hold of Bill McCloskey, and run it by us before you get started. One of our things is we've got to have applications in place before the project is started. Get with us, and we'll talk to you and tell you about things that we work with that the board has liked in the past. And Mike can shorten that learning curve on working programs by a quick phone call. All right, question.
Now, my only question was, I know that like last year after COVID, you all established that meat, the meat processing. Was there ever discussions to actually develop a program for dairy in the same like wheelhouse of trying to invest in the future of, even if it's not multi-farmer impact, it's really investment in dairy? Because I mean, we have considered being custom processors for more dairies, but we can't do that if dairies continue to go out. So I didn't know if there had ever been any discussion, because we were part of the 2018 thing, to do something very similar that you all are doing for meat for dairy.
Well, I was
and you weren't there.
So I can't speak to what discussions were there or not, but I also Will Beeler and I work very closely together, and I know when the meat lenders came out to the producer, H, I know we were over at KDA for a quick talk about what are not. I think these are things that are worth discussing. I think again with these type of projects, it takes leadership, it takes an organization, KDC to bring some proposals like that together. And we really are an application taking business.
Well, and I think my biggest concern is always I would love to come to GOAP, but unless I take milk from other farmers, I'm not going to get approved. Or that's the perception, is that I would never get approved for state funds because I have no multi-farmer impact. And I mean, we're in Henry County, and that's a big thing for county funds too. So technically, I don't qualify for any grant money because, I mean, right now I'm just trying to save ourselves. Actually, we're just trying to restart, but so we don't have any multi-farmer impact, and I don't know how many people in this room actually have multi-farmer impact versus just trying to save themselves.
Well, that's a good point, and that's one of the things the state looks at is how many have the multi-farmer, and that's the way the meat product. We're expanding the custom shop. I'm trying to about this, but that 30 processors got there, that's up the average animal unit of 12,000 head. So that's where it gets down because I like pork. And so that's where,
absolutely.
If you're going into
Absolutely.
Henry County to talk about, that's
right.
I hear this every time. This is a great project. Want to invest in it. We're looking at 2 match for state dollars.
Right.
But then they're neither thinking.
But it only helps you. It doesn't help anybody else.
That's one of the things I'd like to change the narrative where we're looking at competition, but maybe if we did something like this what is the impact? Hey, the next 5.
Right, because I mean, ultimately, we would love to start with ourselves. And as soon as we give ourselves that oxygen mask or that life raft, we would love to be able to open up a custom process. I mean, Pennsylvania has them, Northern Ohio has them. I would love to be able to be a custom processor for another dairy farmer, put their label on it, let them sell it at their local markets. I would love to do that. But I have to say myself first, So I just didn't know if there had been any discussion like that.
Well, it has been discussed. See where down to this application. What I tell folks, again, number one, I can speak for a whole decision. I can talk and educate on both sides of it. But I do say that never funded. Those are automatic. So the others, I think it's good and a chance to venture and catch. What we do through the process, application, and we've got a committee put together, divides up, rotates. Not every board member has everything. And Bill McCloskey kind of refers to that as KDA or you got to come and go through everything. Normally we're going to involve bigger projects, get the third party that comes in and helps you with the business plan and work. Then you get to have this dialogue and that case. I think these for project you see there are some that get funded with how you can tell your story and understand the right use of
I'm going to tag in for a second.
Yo, please.
I think that is an excellent opportunity to where the value-added dairy grant just opened last week. Can help supplement those.
Right.
So it's still a Shark Tank. It's still multi-state. It's still a competitive application, but it's a smaller Shark Tank because it's just focused on value-added dairy production. And with that grant, under 150,000, you can just be impacting you. Over 150,000, we got to impact more than just Right. So there are some things that we can't do with that. We can't pay for a building. We can't pay for any of the sanitary equipment that needs to go on the wall. It's got to be specialty equipment, but we can help take some of the financial burden off of that. Other thing that's different about that program is it's not matched. So you don't have to match. It is a reimbursement program. But please, 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 please wait until your application is approved to start purchasing things, or we can't reimburse you for it. So
there's so many cost sharing programs for any of these things. That is always the case. I am a farmer. I've worked with farmers for 20 years. I understand how we operate. And a lot of times when you started, then you're talking about it, and somebody mentions costs. So that's why I try. If I get in front of a group like this, centers of influence in your communities. Just make sure, always just call us and run through it first. It make all the difference. Yes, thank you very much. Great to be with you, and I'll hang out through the break today. If anybody's got any other questions you want to talk about individually.